Hi folks, this is Sean Hyman from Chart of the Day, and I want to talk to you about one of my latest trades in the Currency Cross Trader service that we just closed out, reaped 204 pips from it. And I want to talk to you about the technical patterns that helped me to reap the 204 pips from my latest trade. First off, the thing that I noticed here, of course, we've got an upward sloping trend as noted by the 200 SMA on the daily chart of New Zealand dollar versus the Japanese yen. But we've had a multi-month consolidation, which I knew would throw a lot of people off and think that it was a downtrend. But really, it was an upward move, consolidated the upward move, and I felt it would get ready to head higher. One, because the 200 SMA was still headed higher, and two, because I felt interest rate hikes were coming from the central bank in the months of probably June or July, somewhere around in there, and the big money likes to get in ahead of those moves before it becomes obvious. But those are the fundamental factors. The first thing that I notice, of course, is there's a double bottom that happened here, and I'm not normally quick to call double bottoms, but once I saw the double bottom break this downtrend, that's when you really have a confirmed double bottom, when your downtrend line is broken. So a lot of things that look like double bottoms, but most of them aren't. They're just consolidations on their way down further. But then when they come and break a temporary short-term downtrend line, then you know you've likely got a huge reversal. And so this came down and formed a double bottom, which is a W on the chart. Here's the first leg, comes up to the middle, and then here's your second part of it. So we broke this, and we had a double bottom here. Now that's a bullish pattern, and a minimum price target for a double bottom pattern. You can take this midsection here from the bottom of the pattern to the peak of the double bottom pattern. So right there in the middle of the pattern, take that, and you can take that line and project it up from the point at which it breaks out. Now, it doesn't mean it's going to head straight there. Even once this broke out, of course, it dipped back some and then headed north and then consolidated before it got to it. But my projection was, okay, if you have this double bottom and it's obviously broken by the time that it had broke this downtrend line, so that confirmed the double bottom. If you take the double bottom's price projection pattern of the width of the width between the peak and the bottom of the double bottom, and you project that distance, that number of pips, up from the point at which it breaks out, that gets you to above this downward correction line. That's key, because that means that if this double bottom is correct, and I believe that it was, then it means that the break above this downward correction is also correct, as we're seeing here today. The double bottom pattern has pretty much been, the minimum price target has been met by this spike upward here. Now again, it can go further, but if we've gotten above this correction line, then there's a huge chance that we'll probably pull back just the correction line and head even further. However, we had gotten into this trade early in anticipation of the break, because I knew that we would probably get a huge pop as it came out of the break, as a lot of people weren't expecting it, and as a lot of stops got run from them being on the wrong side of the trade, thinking that this was a downward trend rather than an upward trend. And so it would put us, along with the other institutions, on the right side of the trade. And so we got in just below 66 at 65.95 in our model portfolio. And then we got out right at just a hair under 68. We made 204 pips total on the trade. And it was I believe really rather well thought out, with several factors: the uptrend as noted by the SMA, the pullback within the uptrend, the double bottom noted that had broken and given us a price projection which happened to take us higher than the consolidation, and that's what I was counting on, was the minimum price target being met. So as soon as this had pulled up and had a pullback, I got into it. We were in it for a couple of weeks. And then it finally broke loose and ratcheted up about 204 pips on the gain. Also, another thing that really made me think that it would happen in the fairly near term, once it had gotten this far, was there was even a miniature head and shoulders pattern right here on the 4-hour chart. And that's why I felt that the break had finally come near. And this is a bullish pattern. It's like a person hanging upside down is what it basically is. You have your left shoulder, your head, and then your right shoulder, and then a break of that. So really on Friday, I felt that over the next couple of days that we would have our bullish break that we were looking for, because this head and shoulders had been broken. And remember, head and shoulders will have a minimum price target between the head and the neckline from the point at which the breakout occurs. So you can take this line, take it from your point of breakout, and you'll see it actually goes to about 68.50, and which is just a hair shy of where today's spike high was as well. So again, even that puts you notably above the daily downward corrective line as well. So you had a head and shoulders pattern here that did it, and keep in mind this 4-hour 200 SMA was up as well. And then you had, going back to the daily chart, you had that broken. Notice how that head and shoulders is so much more definitive on the 4-hour than it is here, even though it's the same pattern. And so we break higher. The minimum target for the double bottom and the head and shoulders pattern gets you minimally up to where the top of this line is, right in here. Notice that they come in about the same area here. These are minimum price targets. Both of them getting you decisively above, closes decisively above the downward correction line. You'll probably have a lot of your big institutions get in after New Zealand announces interest rates. We've got that coming up about midweek as well. I don't expect that they're going to announce interest rates and have a rather have a rate hike this time around. Anything's possible. They could always surprise the market, but I doubt that they will. They've really targeted more June to July in the last speeches that I've heard, and so that's what I really think they'll stick with, because they're not normally a bank that likes to surprise the market, but it's not impossible. They can change their mind at any given time. They need to attack inflation all the more sooner. So it comes up, you'll likely see a decent pullback, and that'll probably happen before the rate announcement. And then you could even see more upside as well. But I wanted to lock in this 204 pip gain while we had it. In that way we've seized our profit well ahead of the risk of the unknown, which is the outcome of the interest rate announcement. And then if it pulls back again upon that, of course we want to get back in it. Of course we can as well. But I just want to give you just an example of a trade out of the Currency Cross Trader service. That's where I give exact entries, exact stops, exact limits to take profits at. Even suggest the number of lots to trade there for you as well. And this was just a wonderful gainer. And keep in mind that while we were in it for the couple of weeks, of course, we also gained some daily interest that was crediting to our account as well over those couple of weeks also. So I hope this has been a good learning experience for you. You've learned to not be fooled by a correction within a major uptrend because of the 200 SMA. You've learned a couple of chart patterns here and their price projections through double bottom, and projecting them to see where they would end, to see if they break bigger patterns. If they break bigger patterns, it's even more bullish. And so I had a lot of confidence going in this trade, and that's what was able to keep me in it for a couple of weeks. You got to know why you're in a trade. And just because it's staggering around a little bit and doesn't instantly go there does not mean that you're not right in that trade. It just means it's taking a little longer and it needs a market stimulus to get it going. But that's all that means. So thanks so much for watching. I hope you enjoyed it and got a lot out of it. I really enjoyed teaching this and showing you this. And check out the Currency Cross Trader service when you get a chance at worldcurrencywatch.com. And you can also reach our customer service team, Sarah and Jesse, some of those guys out there, and talk to them about the service. They can talk to you about my track record and all that type of stuff specifically as well. Hey, thanks so much for watching. Bye-bye.